We're going to have a deep dive into Ethereum with a new report out by Matrixport. We've got Markus, Thielen, Head of Research and Strategy, joining us now. So, Markus, thank you again for joining us. And so I'm just looking at this report briefly, and I see, Ethereum has had a roller coaster ride like the rest of the crypto markets, and you say a lot of it has been dependent on the inflation gauges as well as central banks around the world and their movements. Maybe you can start us off from there.
Yes, thanks, Christine. Indeed, we looked at the 15 turning points this year in Ethereum alone, and as you can see, it has been a roller coaster ride, and 12 out of those 15 data points when the market turned are really associated with central bank policies, with central bank, commentaries, and of course with inflation data being released. And the only three exceptions are really in mid-May, when we had the Luna Terra debacle. It was really, then followed by mid-August, when the Ethereum Foundation clarified that the merge will not lower gas fees. And then, of course, the merge itself on September 15th. All other points are really associated with change in central bank policy. And last Friday, we, of course, heard from the Wall Street Journal that the Fed is thinking about changing the aggressive rate hike trajectory. And this would set up then the market for really an aggressive upside move. And when we just look at previous instances when the Fed has turned more dovish.
All right. So what I did find interesting is that you felt that the merge had actually a dampening effect for the volatility of Ethereum. Maybe you can explain more.
Yes, I think when you just look at the price performance, so Ethereum has been in a range for the last 3 months basically, and the way to look at it is that Ethereum offers around like 5.6% realized yield just by if you stake your ETH, and I think for investors that are looking for like a stable yield, I think this really offers interesting upside, especially when we compare Ethereum to other kind of like risk assets, compare them to the volatility of it. The volatility of Nasdaq is much higher now than Ethereum. So if you want to buy into kind of the growth companies, the future networks, Ethereum might actually offer a lower risk upside. Yeah.
Along those lines, you talk about Ethereum having a high Sharpe ratio,
Correct,
given that the volatility has gone down. And for the kids at home who may not be familiar with Sharpe ratios, that's the return of the asset less the risk-free rate divided by the volatility of the asset over a period of time. The thing, though, is that looking at it from purely a yield perspective, there is a positive Sharpe ratio because it's, as you said, it's 5-something%. Risk-free rate is about 4 and change. That gives you 1% divided by the volatility. But the price of Ethereum itself, of Ether itself, seems to obviously fluctuate, and its volatility may be low, but if it's steadily going down, doesn't that essentially kind of wipe away any sort of positive return or potential positive return from that yield? What is the actual absolute return that you would get? Were you able to calculate that to determine what the Sharpe ratio is given the situation? And does that change? Anything change in the price behavior of Ether, given that just the fact that the risk-free rate is increasing, as you noted in your report?
Yeah, of course, it depends on the time frame, right? And of course, we all know that crypto, Ethereum have really gone down, pretty much all year. But then, of course, we have been in this 3 months sideways range trading market, really. And I think when we just, backtest what happens if we really break to the upside out of those ranges. So we had one in the middle of the summer, this year. And I think, this for this current range, we're looking at a number of 1,360. So if Ethereum closes above this level, then historically, you would have made 60% return on average based on the last 10 signals. So, of course, we have gone down, and the Sharpe ratio has also gone down. But there is now a high chance because, A, the central bank is turning, or it appears to be turning in the aggressive stance. And plus, if we suddenly break out of this range and we are very, very close to the upper level to being triggered, then by historical measures, we have had a really strong rally. And I think that's when really the Sharpe ratio is going to shine. And that's how we look at it.
All right. In this report, you also say that the Ethereum Bitcoin correlation is under 80%, and crypto is now more alpha-driven than beta. Explain what you mean by that.
Yeah, so when we look at the overall crypto market, when we measure just the correlation between Bitcoin and Ethereum, and we have something, if the correlation is close to 80% or above, then it's really like a one beta market. Then everything is highly correlated, everything is driven by the same macro factors, and this is what we have seen most of this year. But we had instances like a year ago, and we have instances now where suddenly the correlation breaks down. So we have seen a little bit more volatility in Bitcoin. We have more downside pressures. And of course, there are different market participants trading Bitcoin versus Ethereum, right? So there are a lot of miners being active. And we saw this kind of in July when there were a lot of liquidations by miners. So suddenly the volume of Bitcoin was double than average, whereas Ethereum stayed very, very low. Because again, there are different players in the market. And I think we look at this more than if the correlation breaks down, as it's happening now, and we are close to like just 70% now, is really then there are more alpha opportunities. This is when you want to trade more relative value, where you look at more outperformance trades. And it's not just one way anymore. It's not just one market, where everything is the same. And I think we're seeing this differentiation now. And this is where we will be looking now for alpha opportunities. Yeah, please.
Where are you getting that? Where are you getting the correlation that you're saying is the coefficient at 0.7? Where are you calculating? What's the time frame? Is that a 60-day, 30-day, 90-day?
Yeah, 60 days. Yeah, 60 days. Mm-hmm. We're looking at 60 days. We're also running shorter-term correlations when it's breaking down. Yeah.
Do you think some of that breakdown had to do kind of with the idiosyncratic movements in ETH because of the merge and post-merge environment? Do you think you don't see that as, you don't see it, if I'm correct, you don't see it going back to a coefficient above 0.8?
No, number one. So number one, and this is a good point. Number one, because we think the macro environment is really changing. It seems like we have really reached like the peak hawkishness of the Fed members, and this has really been driving the market this year, as we have analyzed with these data points when the market has changed. But I think the other interesting aspect is that also suddenly Ethereum's revenues number, so gas fees and what people use to transact on the network, are increasing again. And I think this is at least a trend change over the last 2-3 weeks. And I think we have to be really mindful that suddenly the revenues are increasing, so there is more happening like on chain. And I think that's how we look at it. And
Markus,
that's why we think there are more alpha opportunities.
We got to wrap up, but I think the main question a lot of people have is, okay, so is Ethereum undervalued or overvalued, or where should it be going right now?
Well, again, we look at the 3 months range breakout. If we close above 1,360 and we are very close to it, historically you would have made 60% return on average with the last 10 signals. So that's why we are turning bullish, because we are having the macro impact, and we're having also more positive side from the stock market. We have midterm elections, so we would be turning bullish now, and we have been bearish for most of the year, and that's well documented.